Speaking about the attractiveness of the stock, I'd like to put you a bit on the spot. I know one of the major indicators of a stock that has been performing well is on the total share price value. And would you say you've been able to grow this over time? And what does the future portend for the bank?
So you see, my job as the CEO of the bank is to deliver performance in terms of returns, in terms of market share, in terms of course, customer service, which I think over the past years we've done well. The other thing that I'm also focusing on is to diversify our sources of income as an organization. In the past 5 years, we've set up a general insurance business that has become number 2 in the market. We set up an investment bank, which is actually the only Rwandan-owned investment bank that has, for instance, participated in the listing of MTN, the largest telco in Rwanda, yesterday. I was just attending the ceremony yesterday. We have a technology, which is small fintech. So we've been able to offer our shareholders a tremendous performance and also diversification across many business lines. So now what is happening at the stock market, it's not necessarily, sometimes, unfortunately, not in 100% correlated with what's happening in the market. So in the past year of the pandemic, we've seen a crash. And when you look at even all the monies outside the global money that is invested in Africa, all of it went back to safer stocks that were performing very well in the US. And just because of that, we've seen a crash in some quite well-performing counters on the continent. But we believe that post-pandemic, because some countries, and when you look at the way Africa in general has weathered this crisis, I think it's quite commendable, and we believe we'll start seeing some flows of international money coming back to Kenya, to Rwanda, to Nigeria, etc. And this will provide opportunities for us to improve on the stock prices in the next couple of months.
All right, very clear explanation, and thank you for those very loaded sentiments. And Madam Karusisi, it will also be interesting to hear from you. What are some of the opportunities, especially for investors from Kenya and the greater East African region, when it comes to penetrating the Rwandan market?
So I think you said it all in your remarks. The ease of doing business is amongst the top on the continent. I think it's number 2 after Mauritius. And there are a lot of opportunities. When I look at what my clients are doing, and when I look at our geographical position at the center, if you will, of the continent, looking at west and east, I think there are a lot of opportunities. The economy is still not as sophisticated as what you have in Kenya. We don't have enough food processing companies. Agro-processing is still it's developed. So I think there are tremendous opportunities. And the government is even now trying to establish another hub for financial services under the Kigali International Financial Center. They issued a new investment code with a number of incentives, in particular for companies in fund management, fintech, for pure holding companies with very attractive tax incentives. So we believe this is going to create the right ecosystem for us to thrive in the next couple of years. And again, I would tell all my peers in Kenya, please come and work with us in Rwanda. We have a lot to offer.
All right. Rwanda is open for business.
Absolutely.
All right, and as we take this conversation to another level, as we also head to the final close of this interview, and looking at matters with trade finance, there are so many gaps when it comes to financing investors, financing entrepreneurs across the region. How is the bank angling itself towards meeting the ever-growing needs of this sector? As you also talk to us about this narrative around the bank consolidation, we've seen a number of banks being acquired, others being merging in this new dispensation. How will things play out in the coming days?
So I think that's a very interesting question. Indeed, we've seen a number of, a lot of movement in the banking industry. I think in the past 10 years or 12 years, we've seen a new bank entering the market pretty much every year. So now we are seeing very interesting consolidation with KCB acquiring BPR Atlas Mara. We believe at Bank of Kigali, we believe we want to have a solid competitor, because being at the top of the market with about 35% market share, second in line, being equity or BPR with about 10% market share. I think this has not given us the depth we want in terms of serving clients and improving access to finance, because it's something I discuss very often with my colleagues. If we have 11 commercial banks, but we only serve about 30% of the population, adult population. So for somehow we haven't done well. That's why I think we are seeing some consolidation. We want to create strong banks that are able to invest into technology, invest in fintech, and make sure we can bank more people. But also we want to be able to be a bit more sophisticated in our offering. Today we don't have leasing businesses. We don't have appropriate lending for the agribusiness sector, and only strong banks with strong capital and strong networks are able to invest in these areas that are very much needed by the economy.
All right, and as we wrap it up, I'd like to just get your quick closing thoughts around matters to do with taxation, and of course a number of entries to some of these markets have really affected quite a number of investors. What would you like to see moving forward when it comes to a regulator's side of things?
So I think we all want, as business people, we want our governments to work together. We want our economic integration to be a bit more deep, for people to be able to cross the border seamlessly. Capital, labor, we want everything, and goods and services to be able to flow seamlessly. And this requires some work around the regulations, etc. I can imagine for a regional bank like Equity Bank or KCB, working under very different regulatory regimes must be very difficult, because sometimes it's not predictable, and it's just very difficult to get around very different regimes. So that's why I think we call for more collaboration with between our government, our regulators. The good thing is the capital markets in Kenya and in Rwanda quite well coordinated, and this has allowed us to have this full fungibility between Kigali and Nairobi, which is not the case, for instance, between Kigali and Johannesburg, because we also considered the listing on the GAC. So these are things that are working and can allow to provide more opportunities for businesses on the continent. Now, for us to be able to trade across borders, we need standardizations to be uniform across the region. We need even things as simple as border posts to be open 24/7. I mean, this would just allow more goods and services to flow across the border. So we really demand more collaboration and coordination at government level.
Such a pleasure having you on the show, Madam Diane Karusisi, Chief Executive Officer of the Bank of Kigali, speaking to us exclusively here on the Trading Bell Show. I don't know how to say bye-bye in your language. Perhaps, would you like to teach me that?
Murabeho.
Murabeho.
Exactly.
Kwaheri, Murabeho. Well, that's where I want to wrap it up on this week's edition of the Trading Bell. Such an interesting market to play in when it comes to the financial sector. Of course, a lot of expectations from different players across the region. Until next time, keep safe. My name is Abi Gina. Keep it locked here on KTN News.